Let's get to the World Bank and its new prediction for what is going to happen in the global economy. 5.6% is the forecast for global growth this year. But as I mentioned, highly uneven is how the report characterizes it. Ayhan Kose is with us now. He's director of the Prospects Group at the World Bank, as well as our Brian Cheung is joining us. Ayhan, as I look at this report, I have to wonder, as we look at the unevenness of the recovery, as we look at the unevenness of vaccine distribution, for example, and how it's linked to economic recovery, how much is that 5.6% gain even at risk from the unevenness that we are going to see around the globe?
Unevenness is the key word. And when you look at the global economy, the headline 5.6% is a record growth number. In fact, it is the fastest rate of growth after a global recession we have seen almost 80 years. Now, it is the tales of two recoveries. You have advanced economies, they are vaccinating rapidly, and they are delivering phenomenal growth rates. Look at the US. Growth is going to be close to 7% this year, the fastest rate since the mid-80s. China has done well in terms of vaccinating its population. It's going to grow 8.5%. And then you have other countries, emerging market developing economies other than China. Their growth rates are going to be around 4.5%. The main reason is they are not vaccinating rapidly. They are still dealing with outbreaks. And of course, they provided much smaller amount of fiscal and monetary policy support measures. Going forward, it is going to be critical to vaccinate everywhere around the world, vaccinate everyone, and get the vaccination as quick as possible.
Hi, and it's Brian Cheung here. Great to speak with you. So given that point that there could be that kind of disparate recovery because of the access to vaccines, how should countries, beyond trying to improve vaccine distribution, which we heard David Malpass of the World Bank kind of talk about and advocate for at the G7 meeting, what beyond that should advanced nations like the United States, like the other G7 countries, be doing to assist those low-income countries that might have a slower recovery?
So a number of these countries have vaccines, ample amount of them. They are, of course, vaccinating their population first. One thing they can do, start basically donating these vaccines to this COVAX facility, sending vaccines to emerging markets, developing economies. They desperately need these vaccines. The numbers are quite striking. When you look at advanced economies, they have been able to basically vaccinate 50% of population. In emerging market developing economies, that number is much lower. In low-income countries, only 0.3% of population got vaccinated so far. So advanced economies need to donate the vaccines available, provide the financing, and push forward with the initiative. Unless we control the vaccine everywhere, we cannot contain the crisis, and we cannot get ahead of the problem we have.
Ayhan, something else that, a comment that you had in the release that stood out to me was the comments on inflation. And then this gets back to the idea of the multi-track recovery. Here in the U.S., we're talking about a higher inflation environment. There's discussion of whether the Fed will start to change its policy stance. Meanwhile, the global economy has, as you've outlined, really not recovered nearly as robustly as the U.S. How concerned are you guys at the World Bank that the U.S. central bank might end up short-circuiting a global recovery that is in a far more fragile state than it might seem here domestically?
This is indeed critical. As I mentioned, we are seeing this tale of two recoveries. It's the best of times for a country like the U.S. Delivering strong growth. It's the worst of times when you think about low-income countries. They are really struggling. Now, inflation is going to be higher this year. We are coming out of a deep recession. There is a pent-up demand. Commodity prices are breaking records. You have supply disruptions, as you discussed in your earlier segment. So the question is whether the inflation is going to be temporary, the increase in inflation, or it's going to be persistent. Irrespective of the answer to that question. Financial market participants might think that the Fed is not reacting to inflationary pressure. That might increase interest rates and that could increase the borrowing costs for emerging market developing economies. They are still struggling with the health crisis. They are still trying to recover from the deep global recession we experienced. If that happens, we have a number of emerging market developing economies and low-income countries. They have elevated debt levels. If borrowing costs suddenly increase, of course, that will push some of them into serious financial stress. And that's the last thing we want. In addition, some of these countries, because of these inflationary pressures at home and abroad, might be forced to increase interest rates. And that will throttle the fragile recoveries they are experiencing. So inflation problem is a real threat. For the moment, we think it's a temporary problem. When you look at the inflation expectations, they are quite stable. They are still anchored. But it is something we really need to monitor carefully.
Now, can we drill down specifically on food price inflation? Because we know that for a lot of those low-income countries, if food prices do get higher, because even if it's a supply chain issue, regardless of what the reason is, that's going to increase the food insecurity in those countries, which was already pretty fragile before the crisis. So what do you advise the advanced economies or those that are exporters of some of these pretty important food items do to assist those low-income countries to avoid some of that devastating price inflation?
Food price inflation is a serious challenge. In the context of low-income countries, what happened last year, quite remarkable. Inflation was going down around the world, but in low-income countries, inflation picked up primarily because of food price inflation. And now, still, we see record increases in agricultural commodity prices and the prices of food around the world. That creates all types of challenges for low-income countries in terms of accessing the food, of course, feeding the poor. And let's don't forget, a significant chunk of their income, when you think about these lower income households, when you think about the poorer segments of society, they allocate a significant chunk of their income to food. When the food prices go up, their basically real income erode. Now, what to do with this type of serious challenge? Number one thing to do from the perspective of advanced economies, to put the resources on the table, help by providing food as well as financial means. In the context of domestic policies, it is going to be critical not to basically resort to protectionist measures. Try to limit the export of food items, or basically introduce price controls. These types of measures always backfire. And in fact, when they are undertaken by a number of countries, that will lead to higher food prices. The right thing to do is to find ways to basically strengthen social safety nets, strengthen the kind of the channel so people have access to food. If you want to resolve the food security problem, you need to provide the food to the poorest. And that's the solution. And the global community has to get together to basically address the problem.
Between vaccines and food shortages, definitely an acute one that needs to be addressed. Thank you so much. Ayhan Kose is the director of the Prospects Group at the World Bank, and our Brian Cheung. Thanks to you both.